Chapter 12, Step 6, Rapid Performance Analyzer. This step will help you improve your trading performance through data-driven insights without feeling overwhelmed by data. Think about this step as conducting routine maintenance and inspections on your financial fortress while you are building it. After all, you have the overall blueprint, you know what you want to build, and you need to evaluate your progress. Because you want to make sure that the walls are straight and strong so that your fortress will last forever, right? And in order to identify and address any structural weaknesses, you need to rely on hard facts and metrics instead of hunches. Let me tell you an important story about an aha moment I had regarding trade logging and performance analysis early in my trading career. When I first started out, broker account statements confused and frustrated me to no end. And to be honest, they still do. For most people, the easiest number to find is the net liquidation value of your account. And that's what I did in the beginning. Every month, I only looked at the net liquidation value. And for a while, I thought plotting my net liquidation value on a graph was useful. But then I realized this metric tells me nothing about my actual trading performance. Think about it this way. I believe that trading is a business and you should treat it as such. And as you know, when running a business, you have a profit and loss statement and a balance sheet. On your balance sheet, you list all of your business assets and liabilities that help you make a profit or a loss in the business. And of course, these assets have a value, and when you liquidate your assets, you will get some money. Back to trading. The net liquidation value is the amount that you would get if you sold all of your assets right now. But it would be pretty short-sighted if you only looked at the value of your assets. Because if you sold all your assets, then you wouldn't have a business anymore. So when you're running your business, you need to look at your profit and loss statement. This P&L statement tells you whether you're profitable or not, and it shows you exactly how you're making money. 1, what products are profitable? 2, what ads are leading to customers? 3, is your customer service department a profit center or costing you money? Imagine running a business but not knowing which products are profitable and which are losing you money. Impossible to optimize. In the beginning of my trading career, I fell for the net liquidation value illusion and thought that this was the most important metric. But it was like looking at just the balance sheet of a business instead of also having the profit and loss statement. I didn't have the full picture. The aha moment was realizing that to improve as a trader, I needed visibility into the profitability of specific trades and strategies. Actual P&L data, not vague aggregates like the account value. So I began diligently logging each trade with metrics like entry price, exit price, profit or loss, rationale, and notes. This finally gave me the trading insights I desperately needed. With my detailed trade logs, I gained tremendous clarity. I could attribute performance to particular trades and make connections. This understanding enabled me to refine my trading plan based on real insights rather than guesses. In this chapter, we will discuss the 3 steps to unlocking the gold in your trading. Step 1. Logging trades efficiently to extract the numbers you truly need. Step 2. Evaluating performance using key metrics to quantify your strengths and weaknesses. And step 3, making strategic adjustments based on data-driven insights rather than emotions. With the right analytics approach, you can conduct routine maintenance on your financial fortress and address vulnerabilities before they become structural risks. But you need actual data, not assumptions. Let's begin optimizing your trading with proven performance tracking techniques. Action step 1. Log and organize trades efficiently. Yes, I get it. Trading is exciting and logging trades is boring. I know. I don't like to do it either. But I have found an easy and efficient way to do it. So why is diligent trade logging so essential? Because it provides the raw data you need for meaningful performance analysis. Garbage in, garbage out. If your trade history is disorganized or incomplete, you can't extract useful insights. That's why comprehensive logging is the first step to getting valuable insights. Let's start with the end in mind. What specific metrics would you like to evaluate? In the PDF that I just sent you, you will see a snapshot of my trading log dashboard. And yes, this might be difficult to read, but don't worry about it just yet. We will take a closer look at it in the next action step, and I'll explain everything in detail. The point is, if you take a few minutes to log your trades, you get very meaningful statistics, much better than the stuff your broker gives you. Because your broker and many spreadsheet traders are missing a key concept. The key is organizing trades into logical groups that tell a story. This is especially important for multi-leg strategies like the wheel, or strategies like vertical spreads, iron condors, etc. Again, think about your trading like a business. When you first purchase materials to manufacture a product, you're temporarily in a hole. But ultimately, the goal is to sell the final product for a profit. So you want to track the overall profitability of the production life cycle from start to finish. I like to log trades in groups that encompass the entire workflow of generating profits from beginning to end. In the PDF that I sent you, you can see an example how I log a trade. As you can see, this is a full circle wheel trade. On August 3rd, I sold put options and collected premium. On August 11th, I got assigned, which means that I bought the stock. On August 21st, I sold calls against my existing position and collected more premium. On August 24th, I rolled the calls into the next week. And on September 1st, I got called away, and everything is nicely organized in its own group. In the broker statement, these trades would have been lumped in with other trades that I took between August 3rd, when I sold the put option, and September 1st, when I got called away. It would have been very difficult to figure out how this trade performed, but here I have all the information in one place. I know I collected $6,050 in premium. I know I paid $22.44 in commissions and fees. And I know that this trade made $6,027.56 net after commissions and fees. Further, while I'm in this trade, I can see all the important information that I need for managing the trade. In the PDF that I sent you, you will see the header row of a trade in the trading log. This header row gives me detailed information about my trade. I get 8 critical pieces of information. 1, the cost basis for this trade is $192.50. This is the price at which I bought the stock. 2, my break even is at $190.54. This is lower than my cost basis because I collected premium and therefore already made money on the trade. 3, I have 1,000 shares. 4, I have sold 10 option contracts against these shares. 5, I paid $11.75 in fees and commissions so far. 6, I collected $6,050 in premium. 7, I'm tying up $192,500 in buying power in this trade. 8, the realized profit and loss so far is $1,958. As far as I know, there's not a single broker in the world who gives you this information in a broker statement. This tells the full story of the wheel strategy playing out from start to finish. I can clearly see the profitability of the overall trade sequence. The grouped logging technique tames messy broker statements into a clear, coherent narrative that reveals the true trading performance. Pretty cool, isn't it? Here are 2 more important things I like to track. First, reason. Why did I enter the trade? Was it according to my plan from Chapter 10, Step 4, Bulletproof 100K Trading Plan, i.e. ATP, or did I take the trade not following my plan, NATP? If I didn't follow my plan, what was my reason for not doing so? As you will see in the next section, this will help me evaluate whether not taking trades according to my plan is helping or hurting me. Of course, you need a trading plan in the first place to evaluate your trades against it. But we already discussed this in Chapter 10, Step 4, Bulletproof 100K Trading Plan. Second, confidence level. How confident was I when entering the trade? I remember dealing with emotional struggles early in my trading career. Whenever I had high confidence in a trade and felt that this is the trade that will turn into a winning trade, it often was a loser. And when I second guessed myself and placed a trade with very low confidence, the trade would be a winning trade. I was able to overcome these emotional struggles, but I still like to keep an eye on it. It's very easy for a trader to become overconfident. And it's also easy to lose confidence after a few losing trades. For these reasons, I like to monitor the outcome of trades based on my confidence level to avoid emotional trading. Now that you know how to log and organize trades efficiently, let me show you what you can do with all this data. You're going to love this. Action step 2, evaluate performance using key performance indicators, KPIs. When I first started trading, I'll admit I had no idea what key metrics I should be analyzing to evaluate my performance and improve. I knew that I needed more than just my trading account statements for all the reasons we already discussed. But what are the important key performance indicators, KPIs, that I should look for? Where should I even begin making sense of it all? In the early days, the only thing I knew to look at was my equity curve, which simply shows your account value over time. This gave me a vague idea of whether I was making or losing money in aggregate. I also started tracking basic monthly P&L breakdowns. Again, better than nothing, but still not very insightful. The problem was I lacked an understanding of leading indicators that could help me drill down into the specifics behind what was working and what wasn't. I was playing a guessing game. Over many years and hundreds of trades, I eventually refined my approach to performance analysis. I identified the most insightful key performance indicators, KPIs, that expose strengths, weaknesses, and opportunities. Metrics like profit factor, percent profitable, average win-loss ratio, and many more unlock the keys to elevating your trading. But it takes time to discover which metrics are most meaningful. In this action step, we'll start with the basics like equity curve analysis and monthly P&L, things I wish I had known about on day one. These will provide the foundation. As you gain experience, we'll build up to more advanced KPIs that connect the dots on performance. Here's my promise. By mastering the financial metrics that matter most, you'll gain more clarity in 6 months than I did in 6 years early on. These proven indicators will shortcut your learning curve. Let's begin translating the raw data from your trade logs into clear, actionable insights. I will show you everything on my current trading log dashboard, and in the next section, you will discover how to use this data to make strategic adjustments to your trading plan. So let's dive in. In the PDF that I sent you, you will see my trading log dashboard with the results from January 1st through September 30th, 2023. Here are the 8 key metrics that I like to see on my dashboard. 1. Overall performance. The overall performance shows me the total gain and the total loss. This is a high-level overview to see the total amount of my profits and losses. Next to it, I see the 3 best trades during this time window. In this example, it's CTRA, NVDA, and ALB. 2. Basic key performance indicators. In this section, I see my win-loss ratio, my profit factor, as well as my profit-loss ratio. For me, these numbers are nice to know, but I don't make any decisions based on these numbers. For me, these are numbers like YouTube viewers and likes per video. Everybody wants to know these numbers, and you would look dumb if you didn't know these numbers. But as you will see in a few moments, there are other numbers that are more meaningful for me. 3. Average and longest trade length. I really like these numbers because they help me manage my expectations. Traders, we are weird people. First, we can't wait to get into a trade, and as soon as we are in a trade, we can't wait to get out of it. In this example, you'll see that on average, I'm 11 days in a trade. That's just under 2 weeks, but it also means that I shouldn't expect to be in and out in a matter of days. In fact, as you can see, my longest trade for the time period has been 263 days, which is almost the amount of days between January 1st and September 30th, which is 272 days. This means that it's possible to be stuck in a trade for a while, and that's why it's important to know these things before you choose to trade this strategy. We discussed this in Chapter 8, Step 2. winning strategy selector. 4. Realized profit and loss. This is a visual representation of the realized profit and loss, both cumulative and by month. This gives you a very good visual of how your trading business is doing. As discussed earlier, this is not your equity curve, since the equity curve is based on your net liquidation value, i.e., the assets of your business. And I've never seen a business person plotting the value of their business on a monthly basis. Or if you prefer a real estate example, it's like plotting your house value every month instead of looking at the rental income. Only in the trading world you will find people who are obsessed with the equity curve and nothing else. As I said before, traders are weird people. Anyhow, let's move on to the next section. 5. Fees and commissions and number of trades. I like to see how much I pay in commissions and fees per month. And I like to know how many trades I took, since often there's correlation between the number of trades and realized profit. In my example, I took 143 trades in 9 months. That's approximately 16 trades on average per month. As you can see, in June, I only took 8 trades, which is way below my average. As a result, I also realized a fraction of the profits that I usually make in a month. And that's no surprise to me, since I had been on the road with my daughter Vivian in June and July. But we will get to the analysis in the next section. 6. Dividends. I like to see when I collected dividends and how much. Especially when we talk about the dividend strategy in the next chapters, you will see why this is important. 7. Trade evaluation, according to plan or not. I would like to see if I made or lost money when I didn't follow my plan. That's why I like to capture the data in my trading log. This helps tremendously with the discipline to follow your plan, because in the beginning of my trading career, I noticed that whenever I didn't follow my plan, I lost money. That's a huge motivation to stick to your plan. As you can see, these days, it's not that important for me anymore, since most of my trades are according to my plan, and the very few times I've deviated from my plan, I had a very good reason for it. But in the beginning of my trading career, it was a huge help and motivator to see how much money I could have saved if I just followed my plan. 8. Trade evaluation, confidence level. This can be a huge help for a trader. As you know, being overly confident can hurt you. And sometimes the best trades happen when you have butterflies in your stomach. Here's a personal experience. To date, every single time I need to go on stage and talk to people, I'm so nervous that I throw up a few minutes before I have my talk. True story. But I believe that this keeps me on my toes, because this sick to my stomach feeling forces me to be super prepared versus just winging it. Recently, I gave a talk for the Money Show in Toronto. In the first 10 minutes of my presentation, the projector went in and out, and at some point, the lights in the room went out and it was pitch black. But that didn't rattle me. I was 100% prepared and knew exactly what I was going to say and the materials I would cover. I think if I was just winging it, technical challenges like this would really throw me off. And I believe the same is true in trading. Anyhow, what we have just covered are my first level KPIs. On the second page of my trading dashboard, I like to dive into my second level KPIs. I have second level KPIs for stocks and options. Here are the ones that I'm looking at for options. 1. Realized profit and loss. The first level KPIs show me the overall profit and loss for stocks, options, and dividends. And on this second page, I like to see how much money I made specifically with options. 2. Trade performance. This is super interesting and worth zooming in. This table shows me on what days I traded call and put options. In this example, you see that overall my trades are fairly evenly distributed. But when we look at call options, you will see that I trade calls more often on Mondays, Thursdays, and Fridays. And I trade put options more often on Tuesdays, Wednesdays, and Thursdays. Interesting, isn't it? Here's why I like to see this data. If I see that I rarely place trades on certain days, I might as well not fire up the charts at all and rather do something else. 3. Days in trade. I really love this KPI, and no broker in the world is giving you this information. Here I see at a glance how long I am in a trade, both for the average and for the longest trade. When trading the wheel, this is invaluable information. And as an example, you see that this year I have been 3 days in a trade on average when I'm not getting assigned. And the longest trade without assignment has been 9 days. On the other hand, when I get assigned, the average trade duration is 101 days and the longest trade is 263 days. So for all trades combined, assigned and not assigned, my average trade length is 52 days. This information helps me tremendously to know what to expect when placing a trade. As an example, if I trade UPS and get assigned, I can expect to be in this trade for approximately 3 months. Don't you think that this information is super helpful? 4. Put and call performance. This is probably the most powerful statistic. This alone has helped me to make some major improvement in my trading this year, and I'll show you exactly what I did and how I did it in the next chapter. In the PDF that I sent you, you will find a screenshot of my put and call performance. In this example, you see that I made $69,274 in realized profits trading options. $42,224 of these profits came from trading put options, and $27,050 of these profits came from selling calls. By the way, that's why I like getting assigned when trading the wheel strategy. If I had avoided assignment, I wouldn't have been able to sell calls and I would have missed out on $27,050 in the first 9 months of the year. Now let's dig deeper. I sold 79 put options. 18 of these expired worthless. That's 23%. 13 of these got assigned, which means I had to buy the stock. So that's 16% of all put options. But 48 of these I closed early to take profits at 80% or 90% of max profits. That's 61% of my put options. Isn't this super valuable information? It tells me a lot about my trading style. My assignment rate is rather low with 16%, and I close the majority of options at 80% or 90% of max profits, which frees up buying power and allows me to take trades more frequently. And I have the same information for trading call options. I could go on and on about how super important all of this information is, and you will see in the next section how I use that to become more profitable in the second half of 2023 versus the first half. 5. Symbols performance. This is actually a statistic that you can get from many brokers. It simply shows you how much money you made on certain stocks or ETFs. However, your broker usually just shows you the total amount. I like to go one step further and see how much I made overall. How much of this came from trading call options and how much from put options. Of course, there are many more KPIs that you can consider, but I like to focus on these 8 first and 5 second level KPIs. While digesting all of these analytics may seem daunting initially, stick with it. Over time, you'll discover which metrics offer the most value based on your personalized trading style and strategy. In the beginning, focus on the basics like monthly P&L and the other first level KPIs you've learned in this chapter. As you gain more experience, you can incorporate more advanced KPIs to uncover hidden opportunities. The goal of performance tracking is clarity, not complexity. Prune away indicators that don't directly improve your trading. With practice, you'll learn which metrics offer actionable insights to help refine your system. Because I believe that trading is a never-ending optimization game. Now that you understand how to extract meaning from data, we're ready for the final step, making strategic adjustments based on what the numbers tell you. Action step 3, make strategic adjustments based on data insights. Now you know how to log your trades and you know how to get some key performance indicators of your trading. The question is, what do you do with all this? And is it really worth it? Well, let me walk you through a personal real-world example that shows exactly how I used data from my trading logs just a couple months ago to significantly improve my own trading. It all started in July 2023. For 2023, my goal was to make $150,000 with trading. And when I checked my performance after the first half of 2023, I noticed that I only made $62,206 in the first half of 2023. According to my goal, I wanted to make at least $75,000 in 6 months. So I'm short of my goal. Of course, I could blame market conditions or other external factors like many other traders like to do. Instead, I decided to double check if I was the one that might cause the problem. So let me walk you through my analysis step by step. First, I looked at the number of trades. In the first 6 months of 2023, I did 97 trades. In 2022, I did 250 trades. So it was obvious I was trading less. The question is, why? Was it external factors like market conditions, or was it me? As you know, I'm not a big fan of blaming others or external events for my trading performance, so I decided to dig deeper. Next, I checked the put-call analysis. In 2022, 33 out of the 111 put options that I sold were assigned. This means that my assignment rate was 30%. In the first half of 2023, 4 out of the 52 put options that I sold were assigned. This means that my assignment rate was only 8%. Wait a minute. 30% assignment rate in 2022 and only 8% in 2023. That's a huge difference. And when trading the wheel, assignment is part of it. Because after assignment, I can sell calls and collect more premium. So now we already have identified 2 facts. 1, I was taking less trades. 2, on the trades that I took, I was assigned less. As always, I decided not to blame it on market conditions and instead asked myself the question, if you saw these facts in a trading log of one of your mastermind members, what questions would you ask her? After a few minutes of thinking, one of the hardest things to do, the question became obvious. Did I subconsciously take fewer trades and trade more conservatively to avoid assignment? Well, the problem with the subconscious is that initially we are not aware of it. But as soon as we ask somebody or ourselves a question, we can bring the thoughts and beliefs of the subconscious to the surface. The trick is to wait for 20 seconds before giving an answer, because if you don't wait, your conscious mind will jump in right away and say no. But that's not the real answer. For me, the real answer was yes. So I wanted to dig deeper and I asked myself, why did you trade less and more conservatively? Ready for some complete and brutal honesty? The reason why I traded less and more conservatively was that I didn't want to be stuck in positions. Because toward the end of 2022, I was stuck in Nvidia, Google, and Tapestry, TPR. And when I looked at the KPIs for just these 3 symbols, I saw that the average trade duration with assignment was 186 days. That's 6 months. Yes, of course, my subconscious said, be more conservative and avoid assignment to avoid getting stuck in positions. But instead of helping my overall performance, this was hurting me. The good news, once you're aware of a problem, it's quite easy to fix it. And that's what I did. Remember, in the first 6 months of 2023, I made $62,206 in realized profits. That's on average $10,368 per month. And I placed 97 trades, which is 16 trades per month. I did the analysis in July 2023, and that's when I adjusted my trading. In the next 2 months, I made $28,959 in realized profits, which is $14,479 per month. That's a 40% increase. So I checked my put and call performance for August and September. After making the adjustment in my trading plan, I sold 21 put options and got assigned 9 times. That's a 43% assignment rate. Compare that to an 8% assignment rate in the first half for 2023. There you have it. A real-world example of how analyzing your trading data and metrics can lead to breakthrough improvements. By logging trades, tracking key performance indicators, and digging into the numbers, I was able to identify an issue hurting my results: low trade frequency and assignment rates. Making a few small but strategic tweaks based on these data-driven insights instantly increased my profits by 40% in just 2 months. Conclusion. Look, I know that was a lot of information I just dropped on you. And if your eyes glazed over looking at all those fancy analytics, I get it. I felt the same way for years until the light bulb finally went on. But let me be totally straight with you. Even though trade tracking seems boring on the surface, it is absolutely critical to refine and fortify your financial fortress. I don't know a single professional trader generating lasting success without having key performance numbers at their fingertips. And it comes down to this: success leaves clues. By logging trades consistently, identifying key metrics, and then fine tuning your plan based on data insights, over time, the winning patterns reveal themselves. So I totally understand if you are feeling a little bit overwhelmed, but stick with it. And you can always use tools like the PowerX optimizer to make everything much easier and almost effortless. In the next chapter, we'll uncover advanced tactics to grow your account quicker and increase the strength of your financial fortress. Think upgraded cranes and heavy machinery over hand tools. Let's keep laying bricks steadily while using heavy machinery and turbo boosters to propel your wealth trajectory to new heights. Let's unleash the full potential of your trading business.